Let's check in on Wall Street, which is up at the start of trades today as traders continue to buy into defensive sectors. The closely watched S&P Case-Shiller Home Price Index report has showed that April saw the third consecutive month of rise in prices, and this report has helped lift stock futures a day after another big sell-off on Wall Street, though gains remained fairly tepid. And that's, of course, what you have on your screen is the Dow Jones Industrial Average. The market has opened. It's been 15 minutes into trade. It's up about 26 points or 0.2% as we speak. Of course, the European factor also rubbing off, or rather having a positive rub-off on the US, and you have the Dow Jones trading in the green. Let's also check in on the markets in Europe and Asia. We've got our colleagues from Reuters, Kimberly Lim, who comes in on the show from London, Kathy Yang, who joins us from Hong Kong. Kim, I'm going to start with you. If you could walk us through how European markets are shaping up today.
Well, it is looking better than yesterday, but if we look closely at the numbers, what's moving and just how much is moving, what we see is that it is a cautious market out there. Investors just don't have the oomph or the optimism this week to jump in with both feet. And again, today, Europe's debt crisis very much weighing on sentiment, particularly as we get closer to that EU summit. Now, there's certainly a lot of uncertainty about how much progress will be made at the two-day meetup. The lack of hope not helped with the news that Cyprus is applying to Brussels for a bailout. Now, while Cyprus's bailout is relatively small in the context of bigger bailout deals, it is highlighting the tough European economic backdrop and, of course, the C word, contagion. Now, looking around at the market, fairly flat trade out there right now, reflecting the market uncertainty. Utilities are looking like the best performers. It's pretty low volumes across the board with tentative gains from banks and miners too.
Kim, the euro also remains under a fair bit of pressure. What's happening with the single currency?
Again, similar to yesterday, now the single currency hovering down near a two-week low against the dollar on the worries that nothing or not enough will come out of this week's summit to help solve the debt crisis. So a lot of risk aversion around the market as investors weigh up the fifth bailout for the Eurozone from Cyprus, Spain's ongoing troubles as it recapitalises its banks with Eurozone loans, and still a lack of cohesion from European leaders on exactly what is the best course of action. Now, all that very much weighing on the single currency this session.
Bringing it to you, Kathy, the selling was extended in Asian stocks for a second straight trading session this week. What's the big worry about?
As that EU summit rolls closer, the anxiety amongst investors is just ratcheting up a notch each day. But it's not that investors are not buying. They are. They're buying defensive stocks, though, such as telecoms, sectors that could give them the safety they need should things turn uglier than it already is. But it's not a secret. Valuations are looking real dirt cheap in this part of the world. In Hong Kong, for instance, the China place listed here, in the words of Morgan Stanley's Jonathan Garner, at a deep bear market valuation territory. And it's only a matter of time before Beijing's interest rate cut and the resulting pickup in economic growth in China convinces investors to reappraise the value on offer on Chinese equities.
Now, Kathy, the sell-off in BRIC emerging markets came along with the slide in commodities prices. What's the outlook now for commodities as we see prospects for slower growth in emerging markets?
Commodities prices can be a good barometer for growth in emerging markets, such as China as well as India. And the sell-off we've seen in commodities over the past 2 months has unfortunately tracked this slowdown that we're seeing in emerging markets. Take, for instance, China. It's ratcheted down its growth forecast for the full year because of that slowdown in global trade. And Russia, the almost 30% drop in the price of oil has hit its economy. So all these make for troublesome developments when Europe is teetering on the edge of recession and U.S. businesses are retrenching. So there have been some investment banks now cutting emerging market GDP forecasts, among them Barclays as well as Credit Suisse. But Erwin Sands of BNP Paribas tells us to keep an eye on those industrial metals as well as coal, as these commodities are most sensitive to any shift in an emerging market's growth.
Kathy Yang and Kimberly Lim, both of you, thanks very much for coming in with that check on the markets.